Hey, what's up, my friend? So in today's training, I want to share with you a simple stock trading strategy for beginners. Specifically, here's what you'll learn. Number one, a simple stock trading strategy for beginners so you can profit in bull markets and without getting killed in a bear market, right? Bull market, you close two eyes, you can make money, right? But the key thing is to also survive in a bear market. And I'll share with you a simple strategy that works in this manner. Number two, how to scan for stock trading opportunities, right? In less than 30 minutes a week. Here's the thing, right? There are thousands of stocks out there. And if you were to manually scan chart after chart, right? Each week, right? You'll easily take hours, right? Sucked out of your life. So I'll share with you a very simple technique to identify the strongest stocks out there, right? So you can actually, find trading opportunities in less than 30 minutes a week. So let's get started. Number one, why does this trading strategy works? Few reasons. Number one, it exploits the natural phenomenon of the stock markets. So if you're unaware, the stock markets, they are in a long-term uptrend. Yes, we have bear markets, we have pullback, we have recessions along the way. But if you look at the grand scheme of things over the last 20, 30, 40 years, most stock markets are in an uptrend. Why? That's because economies are getting better, right? They're improving over time. GDP is improved, quality of life is getting better. That's like kind of like the stock market is like a reflection, right, to our improved quality of life. So that's why it's in a long-term uptrend. So we want to take this natural phenomenon into account and to trade along this long-term uptrend. Right, we want to trade along the path of least resistance. This should improve our winning rate and ultimately improve our trading results. Number two, this trading strategy, itself, right, is relatively easy to spot, right? It's the rules are pretty much clear-cut, so you can trade with conviction, with clarity, without second-guessing yourself. So you don't have to man, Rayner, is this a good time to enter? Oh, is this a valid trading setup? The rules are pretty clear, right? So you can see later that, the setup is really straightforward and you can, trade it across the stock markets with conviction. And finally, this trading strategy, right, is on the daily time frame. And this is good for you because for those of you who are beginners in trading, right, you need time to analyze, to think through, right, to make the right trading decisions. Where's my buy order? You don't want to click sell when you want to do buy. So you have enough time to think and analyze the markets, which means you can make better trading decisions. Not like, trading on a 1 minute time frame, 3 minutes time frame where, the clock is ticking, tick, 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 the pressure is on you. So none of it, right? Because it's on a daily time frame. Okay, so let's get started. The rules of this trading strategy. Number one, the stock must be in an uptrend above the 200-day moving average. And this is quite simple, really. In essence, right, we want a stock that looks something like this, uptrend. Okay, and if you overlay with a 200-period moving average, it will be something like this, right? The price is above this 200-period moving average. So that's what we are looking for. Number two, it makes a pullback towards an area of value. It could be things like support, it could be a swing low, it could be a 50-day moving average. So here's how it will look like. So stock in an uptrend, and it could possibly retest this area of value, which could be a swing low or support. Okay, so that's the second thing we are looking for. Third thing, we are looking for a bullish price rejection at this area of value. And bullish price rejection can be defined as, bullish reversal candlestick patterns. And I'll explain more later. Actually, let's do it right now. So bullish reversal candlestick patterns, right, is something like this. Number one, we have the hammer. So why is this a bullish sign? Because if you read this candlestick pattern, it tells you that at this particular candle on this day, the buyers has opened the price at this price point. And when the price opened, right, shortly afterwards, the sellers took control and pushed the price near these lows of the day, at this extreme low. Somehow or other, right, the sellers, they got overwhelmed, right, by sudden influx of buying pressure, and the buyers took control and pushed the price all the way back up towards these highs over here, and then finally closing near the highs of the day. So this is why you have your opening price, closing price, high of the day, low of the day. So in essence, right, you can see that it's a reversal pattern, right? The hammer is like a bullish reversal pattern. Price open here, went down lower, and then finally close near this highs of the day. Right? So this is the first bullish reversal candlestick pattern you might want to be familiar with, the hammer. Second one, bullish engulfing pattern. Why is this significant? Again, if you look at this candle, it's a bearish candle. This tells you that the sellers, right, they managed to close the price lower for this day. The next day, the price opened at this level. Sellers tried to push the price lower near these lows, but couldn't push any lower before the buyers came in, take control, and close near these highs of the day. So you can see that again, this bullish engulfing pattern, what it's telling you is that, sellers, they got overwhelmed again, right, by buyers on steroids, on a frenzy. They close near the highs of the next subsequent candle. So this, in essence, right, if you think about this, right, the main concept, the main essence that I'm trying to bring across over here. A bullish price rejection occurs, right, when the buyers quickly step in, right, and push the price higher. So on a chart, it's usually looking something like this. Price hit down lower, then quickly reverse and close near the highs of the day. Right, this can happen in one candle, like the hammer, or two candles, like the bullish engulfing pattern. And what's important, right, to understand is that I don't want you to memorize these patterns because the variation of these patterns will change, constantly. What's important is to understand the concept behind it. What you want to see is a swift price rejection away from the area of value. The moment the price comes into support or the moment the price comes into a swing low, you want it to get rejected quickly. This can be in the form of a hammer or it could be in the form of a bullish engulfing pattern. The key thing is to see the price quickly leave the level. Quickly, right? That's the key thing. So moving on. Once we have the bullish price rejection at the area of value, then what we want is to enter on the next day open, because when there's a bullish price rejection at the area of value, it's telling you that the buyers are stepping in, right, and the market could possibly hit higher. So enter on the next day open, and finally your stop loss will go 1 ATR below the swing low or below support, and you can target just before the most recent swing high. I'll walk you through step by step, right, how this one works. So first, let's look at some examples. This is a digital turbine. So if I just let you see this chart, this is what we have been explaining all along, right? Stock is in an uptrend. And if you overlay with the 200 MA, you can be sure that the price is above the 200 period moving average. I'll just show you in case you don't believe me. There you have it. Okay, stock price is above the 200 period moving average. Next thing, right, we want the price to come into this area of value. So where is the area of value? This is one possible area that you're looking at, this swing low over here. So what you want to look for is for the price to pull back into this area of value over here. Okay. Once that has happened, what you're looking for is a bullish price rejection. So for example, let's say a bullish price rejection like this could be a hammer, right? That would be a valid entry trigger for you to go long on the next day open. Stop loss 1 ATR below these lows. Targets before this swing high. So now that you have seen how this setup could play out in the future, let's look back at some cherry-picked charts, right, and see some, so-called textbook examples, so you know what to look for in this particular trading strategy. So, first cherry-picked chart example is this one over here. Stock is in an uptrend. That's one, right? Trend. Number two, what we're looking for is an area of value, and if you see this over here, we have this area of value over here, where previous resistance became support and could become support. So let's call it as support. Number three, we are looking for a bullish price rejection. In this case, we got this particular reversal candlestick pattern here. So this is why I said don't memorize the pattern, because if you look at this isn't really anything similar to what I shared with you earlier. But remember, the key takeaway when we are dealing with bullish price rejection is that we want the price to quickly reverse away from this area of value, and this is in essence, right, what we have. So if really you're not sure, one tip that I can share with you is use a line chart, and you look at how swift, right, this price came into the level and then swiftly get rejected away from it. Okay, so that's a tip that I can share with you using a line chart if you have trouble defining, right, a bullish price rejection. So anyway, since this is a bullish price rejection, we are looking to enter on the next day open. So next day open, price gap up higher. So at this point, we are looking to buy. Stop loss, I mentioned, right, 1 ATR below the swing low or 1 ATR below support. So this is the most extreme low. So what we're going to find out is what is the current ATR value. So what you can do is just go to indicator, find ATR, click average through range. I like to use 20 period because there's about 20 trading days in a month. I use SMA, and you find out, right, that the most recent ATR value is $2.82. Wow, Rayner, how do you know that? Because it's stated over here, right, $2.82. So what you want to do is to find out what is this extreme low level. Let's call it X, and then you minus by $2.82, and that value is Y, and that is your stop loss level. And if you are not a fan of algebra, I'll walk you through step by step using my trusty calculator. So the extreme low of this candle, it's about $25.26. Okay, $25.26 minus $2.82. So it gives me a total of $22.44. So my stop loss will be at $22.44. So I'm just going to do this in red. That's your stop loss. What about target? So when I mentioned the target earlier, we want to look to take profits before the most recent swing high. So the most recent swing high you see is this over here. Why not above it? Right? Because remember, swing high, swing lows, support resistance, they are an area on your chart. The price might not reach to these highs, right, before it comes down lower. In fact, you could just reach just before the swing high and then reverse lower. So the last thing that you want is to see your open profits, right, reverse all against you and then hit your stop loss. So don't be greedy. Don't try to aim for the extreme high. Don't try to, aim $1 above it. Set it more conservative. Set it right a few ticks right below the highs. So usually what I'll do is, if I know that the highs, let's say at this point, it's about $42, I'll try to aim it like $41.90. So let me just simulate if I'm going to use it for a line. Okay, my target will probably be around 41.29 thereabout. That's my target. Okay, so this is how you identify this particular trading setup. Another one, let's look at Fiverr. Let me just walk you through. So same thing here. If you look at this market, first thing first, this stock is in an uptrend, forming a series of higher highs and higher lows. If you pull out the 200 MA, you can be sure the price is above it. Let me just do it in case you're not convinced. There you have it, right? Price above the 200 MA. Second thing we are looking for is for the price to come to an area of value. In this case, it retests, right, this previous swing low over here. That's our area of value. The third thing we are looking for is a bullish price rejection. As you can see, we have this strong bullish price rejection. Notice how swiftly, how quick the price came into this area of value and then reverse and close higher above this swing low. So this is what we are looking for. The swifter, the faster the price rejection, the better. So in this case, I don't really know what exact candlestick pattern this is called, but this is what we are looking for. Next thing you're going to do is enter on a next day open. So next day candle, next day the price open at this price point. Then stop loss 1 ATR below this low. So what's the current ATR value? $14.96. So you take the low of this candle, the swing low, it's about 129.21. So you take 129.21 minus 1 ATR, which is $14.96, and you get about 114.25. Okay, so your stop loss is at 114.25. Ping. Okay, so this is your stop loss. What about targets? I mentioned target, we want to be conservative. We want to set it right just below the most recent swing high. So the most recent swing high is this high over here. So just before it, be somewhere about here. There you have it. That's your target. So your entry will probably be somewhere about here. Stop loss is here. Possible target over here. Of course, right, if you look at this from a risk to reward standpoint, it's less than 1-to-1. And this is something that, again, you would have to consider, right? Is this something that you're comfortable with, right? You are risking $1 to possibly make, let's say, 70 cents on this trade, or maybe even 80 cents. So again, right, from a risk to reward standpoint, you have to decide for yourself, what you're comfortable with. For me, anything, right, a minimum of a 1 to 0.8, I'm perfectly fine with it. So that's the second example. Just two more examples, right, before we continue. So for this one, right, this is the chart of Zoom. So again, if you look at the stock, right, this stock is in an uptrend above the 200 MA, series of higher highs, higher lows. Then we have this area of value over here. Number 2, this area of value, which I will call it support. Number 3, we have this bullish price rejection. You can see over here, price came in, right, then quickly get away from this area of value and close higher for the day. That's bullish, and you're looking to enter on the next day's open, right, which is somewhere here. And it gapped up higher again, so that's a good sign. Stop loss 1 ATR below this lows. I'm not going to show you how to calculate it because you should be a pro by now because I've done it twice. Stop loss will probably be somewhere here. Target possibly just before this swing high here. And in this case, this is a losing trade, just to, kind of like, manage your expectations that yes, you can be trading with the trend. Yes, you can be trading from an area of value. And yes, you still will have losing trades. Okay, so embrace that. So one more final example. This one is the chart of Peloton. So this one is it's a very nice setup, right? Because again, number 1, we are trading with the trend. Number 2, this area of value is significant for 2 reasons. Number 1, you can see that this previous resistance, which could become support, that's 1. And if you overlay with the 50-period moving average, you have the confluence of the 50-day moving average as well. This one here with the 50-day moving average. So you can see that yes, there are lines on the chart, but you must treat them as an area. Treat them as an area, okay? And finally, we have a bullish price rejection, this one in the form of a hammer over here, this candle. So you enter on the next day open, stop loss 1 ATR below the most recent swing low, which is probably somewhere here. Possible target just before this extreme swing high over here. Okay, in this case, I think the trade went pretty nicely in our favor. Okay, so with that said, moving on, I've shared with you a few examples. The question is, how do you actually scan for such trending markets, for such nice uptrend stocks, right, without wasting hours in front of your monitor? So I'm going to walk you through step by step, right? The tool that we're going to use is called Finviz, and I'm just going to show you how to do it right now. So go to Finviz and you look something like this. Click on Screener. So this is Screener, it's free that you can use. Market cap, ideally, I would go with anything above $2 billion, right? So once that is done, you go to technical. What you want to do is to look for stocks that has increased over the past 1 year, right? At least 200%. So this one is subjective because it depends on the nature of the market. If the market is in a really strong bull market, you can even be more selective and maybe look for stocks above 300% or even 500%. But in a not so bull market where maybe it's, buyers and sellers, or rather the market is kind of neutral, you might want to be less stringent and maybe look for stocks above 50% or just 100% for the year. But as of right now, I just go with 200%. Click on it and it will show you a list of stocks, right, based on our filter that we have earlier, right? Stocks which are above the $2 billion market cap and has increased at least 200% over the past 1 year. Next thing you want to do is to go to performance. Click performance. Okay, it will list all the stocks that has met our requirement. And what you want to do is to rank them, right, from the strongest to the weaker. So you just click performance for the past 1 year. You click on here. It shows you all the bottom one. You click one more time. You get the strongest stocks all right at the top, right? So you can see that. For example, NVEX has increased 2565% over the last 1 year, followed by BLNK 2100%, so on and so forth. Now, at this point, right, you have actually filtered down, right, from thousands of stocks, right, to the most strongest, nicest trending stocks out there in the markets. Okay, and what you want to do is just to quickly, right, look through them and see which of them has any similar trading setup to what I've shared with you earlier. So for example, NVEX, I look at this, right, you can see over here, let's go to trading view, just look at NVEX and see how this chart looks like. Is it similar to what I just shared with you? And if you look at this, no, not quite, right? You notice that this chart isn't in a nice uptrend, so skip it, move on. How about next one? BLNK. Let me have a look at BLNK. Blink charging. Hey, this one is quite similar. This is a swing low that we could possibly trade off. So what you can do is to add this to your watch list on TradingView. So for example, you can just say, for example, create a new watch list. Let's call it stock trading. Then you add this stock, right? Blink charging to this watch list. So I just add in BLNK. And there you have it. It's in here. Move on. Let's do it. A few more examples. How about plug? PLUG. So let's have a look. Plug power. So you can see that this one here, yes, the trend is nice, it's in an uptrend, but the setup might take a while more to develop. It possibly could, make a pullback, retest, and then come back here, retest this low. That could happen, might take a few weeks, but still worth keeping in your watch list. So let's write this down as well. Plug. Okay, let's do one more. How about Fiverr, right? FVRR. Okay, so this one here. Fiverr, you can see that, okay. Over here, possibly we could get a retest of this previous resistance, which could become support, or even deeper into this area of support over here. So let's keep Fiverr here in our watch list as well. So what you want to do is to go through all the stocks over here. Depending how many you want in your watch list. If you want 30 or 40 stocks, you look through the first 2 or 3 pages. That's enough. Bring those tickers to your watch list, and those are the stocks that you want to focus on in this coming week or the next few weeks. Okay, so with that said, let's do a quick recap. Number 1, we are looking for stock which are in an uptrend above the 200-day moving average. Number 2, we are looking for a pullback towards the area of value. Could be support, could be a swing low, could be a 50-day moving average. Number 3, we are looking for a bullish price rejection at the area of value. Number 4, you can enter on the next day open. And finally, number 5, your stop loss will go 1 ATR below the recent swing low and target right just before the recent swing high. And by the way, if you have enjoyed today's training, then you will love Price Action Trading Secrets. So Price Action Trading Secrets is a 140-page color physical trading book, and you can get it at this link over here, priceactiontradingsecrets.com. I'll put the link somewhere below this video. And in this book, right, you will learn professional price action trading strategies, right, to profit in bull and bear markets. You'll learn about support resistance, how to draw them, how to tell when you will break. You'll master candlestick patterns. You'll learn reversal trading strategies, breakout trading strategies, risk management, and much more. And also, if you get a copy of Price Action Trading Secrets today, I'll add in 3 bonuses for you. Bonus number 1, you will get a PDF version of Price Action Trading Secrets. So you don't have to wait for the book to be shipped to you to start reading. I'll send it to your email immediately, right after you have, invested in Price Action Trading Secrets. Bonus number 2, I will also give you a position sizing calculator that you can use to manage your risk so you never blow up another trading account. And finally, bonus number 3, I'll share with you this webinar called Part-Time Trading Secrets, where it will help you, right, become a consistently profitable trader even though you're trading part-time. So all this will be sent to you for free when you invest in Price Action Trading Secrets today. And here's the deal, right? I know you have probably read countless trading books, right? And And here's what I'll do for you. So if you find that price action trading secrets is not for you, you didn't get any value out of it, or for whatsoever reason you don't like it, right? Just let me know within 60 days. Email support@tradingwithrayner.com and I'll refund you in full. No questions asked. And you can still keep the book and the bonuses, right? As my way of, saying thank you for giving this a try. So just get started immediately. The link here is at priceactiontrading.secrets.com. Over here, come to this website. Just click any of this blue button, which looks like this, the blue button. Okay, and you'll be brought to this checkout page at the bottom. Just fill in your details, shipping address, and we'll get it out to you ASAP. So with that said, I wish you good luck, good trading. I will talk to you soon.